My name is Atalanti Angelopoulou, and I'm the market analyst from the Midlands region at CoStar. Today, I'm going to discuss some of the latest commercial real estate trends within the Midlands, primarily focusing on offices and drawing on CoStar's live database of more than 90,000 commercial properties across the region. Starting with a look at the local economy, the Midlands economy is expected to rebound strongly in 2021, according to Oxford Economics' latest data. The region's GVA is predicted to grow by an average of 8% in 2021, outperforming all UK regions as its sizable automotive sector recovers. Moving to the leasing activity, leasing volumes dropped in the Midlands since the pandemic struck in March, but CoStar's data suggests that the number of office deals rose by more than 80 in the region in Q3 compared to the previous quarter, pushing the total number of deals over 200. This suggests that smaller firms are continuing to seek office space in the region, with the 2,000 to 4,000 square feet size bracket particularly busy. The larger end has been quieter, but a few noteworthy deals have closed. The largest was in Coventry, where energy firm Cadent pre-leased 90,000 square feet at the Prospera Anstey in October, in the 10th biggest office letting nationwide since the crisis began. In Birmingham, the public sector accounted for a large share of leasing volumes in recent quarters, while private firms have been less active during the period but proved willing to pay prime rents for Birmingham CBD sought after office developments. For example, law firm Knights leased 18,000 square feet at the recently built Chamberlain 2 in July at a record high rent of £37.50 per square foot. In the out-of-town submarkets, the largest deal was by artificial intelligence startup Century, which subleased 26,000 square feet in West Point at Walsall in August. In Nottingham, the Metropolitan Thames Valley Housing signed a 20-year lease for 34,000 square feet at the recently renovated Waterfront House in April. Despite the ongoing turmoil, the vacancy rate in the region reached an all-time low of below 4% in Q3, supported by tenants moving into space leased prior to the pandemic, as well as the lack of new deliveries. On the development side, the shortage of high-quality space and strong pre-leasing activity encouraged development in the Midlands in recent years. Several large mixed-use schemes are currently underway in Birmingham and Nottingham. By far the largest in Birmingham is Paradise Circus, a landmark development set to deliver more than 1.7 million square feet of office space in total, 120,000 square feet of retail and leisure, and more than 3,300 built-to-rent homes as well. Despite the ongoing turmoil, the vacancy rate in the region reached an all-time low of below 4% in Q3, supported by tenants moving into space leased prior to the pandemic, as well as the lack of new deliveries. On the development side, the shortage of high-quality space and strong pre-leasing activity encouraged development in the Midlands in recent years. Several large mixed-use schemes are currently underway in Birmingham and Nottingham. By far, the largest project in Birmingham is Paradise Circus, a landmark development set to deliver more than 1.7 million square feet of office space in total, 120,000 square feet of retail and leisure, and more than 300 built-to-rent homes. In addition, HMRC's new West Midlands hub is also under construction, set to deliver by the end of the year. Around 4,000 servants will move from several departments as part of the government hubs program by the end of the year. In Nottingham, the first office building of the scheme, Unity Square, is under construction, also pre-let to the HMRC. Outside the Nottingham CBD, RM Resources' purpose-built office facility within Harrier Park in Ashfield is also underway. The supply of new high-quality offices has been met with strong demand from a wide range of occupiers. By far, the largest pre-let in a newly built scheme was by BT, which leased nearly 300,000 square feet at 3 Snow Hill in Birmingham this January. The consolidation trend widely seen in the public sector is also happening in the private sector, with the lease of 3 Snow Hill being part of BT's Better Workplace program. CoStar's forecast for supply, demand, and vacancy has Midlands office vacancy rate to remain at low levels until the end of the year, as nothing delivers imminently in the region. Although more than 2 million square feet is currently underway, the supply pipeline is considerably smaller than it was heading into the great financial crisis. Demand is set to weaken, although the job support program, reductions in office density, and the relatively strong rebound in jobs means it should remain mildly positive, helping to prevent steeper increase in vacancy, at least in the base case scenario. Looking further ahead, the opening of the phase 1 of HS2 will likely support demand in the future, with more firms relocating part of their operations in the Midlands, like HSBC did in 2018 when it relocated around 1,000 employees from London to its new headquarters in One Centenary Square. Moving into rents, office asking rents tend to have a bit of a lag on responding to downturns, so CoStar's Midlands rent series hasn't shown any losses yet. Looking ahead, we expect rents to come under downward pressure, but not to a great extent, thanks to vacancies remaining enduringly low. Activity also returned in the Midlands investment scene. Investment volumes picked up in Q3 thanks to investor demand for prime offices bouncing back. The sales volume in Q3 was significantly higher than during the same quarter in 2019 and more than three times the office volume in the Northwest region. In an effort to avoid risk, investors have focused on safer, well-let buildings. For example, in September, Germany's Union Investment acquired 55 Kolmoro at a 6% price uplift from one Nuveen paid in 2018. Prior to this, Over Real Estate acquired number 1 Colmo Square from Legal & General, while in this case the property was acquired at a slight discount compared to its previous sale in 2015. Both these prime sales have attracted pre-pandemic yields, which pushed the average transaction base yield to a more than a 10-year low in the region in Q3. This trend will likely continue in the near term, with increasing evidence of pre-pandemic pricing persuading more owners of prime buildings to market the properties. For example, Patricia has brought 134 Edmund Street to the market, and Birmingham's landmark site, the Mailbox, is about to float on a property stock exchange. But it's not all about Birmingham and prime offices. In Leicester, BA Pension Fund acquired Next head office in Enderby in a sale and leaseback transaction for 48 million in mid-June. This type of disposal has been a popular strategy pursued by retailers of late in an effort to mitigate the hit to their businesses caused by the pandemic. In Coventry, LCN Capital Partners acquired the recently renovated Sapphire Court for 22.2 million in June. The buyer paid slightly more than the asking price, demonstrating competitive bidding and robust demand for well-let regional offices. The sales of 55 Colmore and number 1 Colmore Square helped to push Birmingham's office volume above 200 million in Q3, putting the market at the top of the Big Six investment chart. Birmingham's sales volume was by far higher than in Manchester and in fact higher than all the Big Six markets. This chart shows the total investment over the past 5 years divided by the total amount of office stock in each market, and as you can see, Birmingham and other Midland cities such as Northampton are among the most liquid in the UK. In international context, the Midlands cities also punch above the weight. Thanks to CoStar's international database, we can compare UK to US office markets such as Chicago, Miami, and Austin. Foreign investment into UK commercial property has soared in recent years, and the Midlands were no exception. The region's strong occupier fundamentals, transport connections, and the future delivery of HS2 have attracted more and more foreign capital. In fact, the West Midlands has some of the highest shares of foreign investment in the UK, with office volume deployed by foreign investors accounting for about 25% over the past year. Investors from all across the world have targeted Midlands real estate. More than £1.5 billion of foreign capital has been injected into the Midlands office market since 2015. Most capital during that period came from the Middle East, which spent nearly 95% more than the previous 6-year period. Among the most notable deals was with the Gulf Islamic investors, which acquired the Lewis Building and a Priory Court for about 140 million in 2019. So to summarize, Midland's economy is set for a strong rebound in 2021. Leasing volumes remain depressed by historical standards, but the number of office deals rose, suggesting that smaller firms are still seeking office space. The larger end of the market has been quieter, but few notable deals have closed. Vacancies are at an all-time low, with speculative supply posing little risk for the near term. Investment is slowly picking up again, thanks to prime offices trading, while the Midland cities are popular in a domestic and international context. Last but not least, the region recorded strong foreign capital over the past few years, with Middle Eastern investors particularly active. Thank you very much for watching.